All right, all right, all right. Friday, March 27th. 2 minutes until U.S. cash session open. The markets continue their downward spiral thanks to high oil prices. Fridays are a great day to trade auction theory and order flow. So let's make today a good day. Markets are down from value from overnight, but that doesn't really say much because it was done on low volume. So we'll see what the U.S. session has to say about all of this. Because anything outside of that does not really matter. There's no volume outside the U.S. cash session. So people who trade overnight, you're kind of silly. One minute. 1 minute. I mean, we had a little bit of a, if you look at the TPO from yesterday, the downward spiral here from balance on Wednesday, we had balance around 6650. And then we did this little bit of a downward spiral, attempted to find balance, but was unable to do so. Zoom out a little bit. We have not found balance down in this area as of yet. So I suspect that the markets again will continue to explore until we can find an area where both buyers and sellers can agree, and it will create that little bit of a normal distribution. But let's see what happens today. I expect with all the headline risk, the Iran war news, oil prices, that a lot of institutions and wealth funds today are just going to unwind positions. They don't want to carry headline risk going into this weekend. So I suggest, I believe that there's not going to be a trend day. It's just Fridays are typically not trend days. That happens earlier in the week. And then on Thursdays and Fridays, you typically find more balance. But here we go. Fast rotations at the open, adding a lot of volume. Let's see if this continues. Let's see how much volume we get within the first minute of trading today. Anything really above 10,000 contracts in the first minute is pretty normal. And it looks like you're definitely going to get more of that. Again, institutions may be unwinding today. They just don't want to hold positions over the weekend. It's too much risk. So already we're kind of noticing that these rotations are slowing down a little bit, right? We're adding volume, but this isn't like gangbusters of volume add. Let's see what happens over the next few minutes. We've got news this morning at 10 o'clock, U of M consumer sentiment numbers. It's an orange foldered news event. So we will not trade into it. We will not trade through it. I generally do not begin to think about trading until at least 9:40, 9:45 after the initial auction settles down. So given that we have a news event at 10 o'clock, you could slip in a trade at 9:45, 9:50-ish. But after 9:50, I do not consider trading until after the news event settles. So already here, look down here at 648450. Like we're adding volume. I mean, it's pretty decent. You're getting pretty good rotations. It's pretty good volume build down here. Large block order at 6481. Large block orders don't really mean anything, despite popular belief. Okay, I'm breaking down a little bit. Not a ton of volume being added at the lows. Rotations are still kind of quick. Getting a little bit of an opening drive move here from the open. Prices opened at 649450. So let's see what happens here. Again, usually the initial auction, the first 15 minutes of the market on the U.S. cash session open is pretty volatile. It's no trade. If you trade auction theory and order flow, you let this go by. And I'll also take this time to make a couple apologies. One, on the stream quality of this. While I did purchase a new webcam, I am waiting on the new microphone. And then also I need to do something about the graphics for the stream down the road. I'm more interested in the content and the educational purposes of these videos, not how they look. And I know we'll gain more viewership with, if we improve looks, but as of now, it's more about content and helping people learn how to trade better. So we see some sellers coming in, and they're defending the 6481. You get in the flashes of the divergence here. So now that black order here at 6481 has more significance. Now that we're seeing that there are people who are backing this up, and they're putting limit orders around 6481 to hold the market down. They're just absorbing the buys. But on these subsequent, you see how slow we're getting right here? Look at this is slow. The slow rotations, the slow volume builds. Market doesn't like this price. Participants do not agree that this is a good price. We'll leave this area. Prices will not stay here. These rotations 3 minutes after into the open are not sustainable. Markets are designed to facilitate trade, and we're not facilitating very good volume builds here. So all it takes is one hard seller, one hard buyer to move prices away from this. We'll see as we rotate down, see if the rotations and the volumes pick up. Is this a stunning breakdown here? Absolutely not. If you were thinking that prices are just going to break down and we're going to fall off a cliff here, you would see very fast rotations at the bottom, a lot of volume building before the drop, and then it drops. When you get to the end of a range and you get the slower rotations and the slow volume builds, it usually means that price is not sustainable and price will move away from it and go back to an area where there was good volume build. Will we test below this? Yeah, very likely. There's enough volume here where this is probably not the low, but I don't see us just absolutely breaking down here. Like we had a low volume build here at 6479. We're still getting kind of this low volume build here at the lows at 472. Not to say that, we can't just absolutely break down here, right? Because see these black orders, again, these are the institutions just exiting their positions. Once they get a favorable price, boom, they just hit the market with everything that they got to get out of their positions before the weekend. This is very typical for a Friday. No trade considerations as of yet. We're still too early into the auction. We're only 5 minutes into the auction. We're trading within value right now. The value range is set at 68%, not the conventional 70 or 75. Those lack statistical significance, but 68 represents one standard deviation away from the mean. All right, so see how value is moving down with prices. So this means you do not want to get long here. We're seeing the slow rotations. We're seeing the slow volume builds. Have we made the lows yet? Probably not. But considering that we're within value, we don't want to take this trade. We want to take trades from outside of value to inside of value. That's where the high probabilities lie. And especially on the days like Fridays where you're most likely to get a balanced range, where it forms that kind of like nice bell normal distribution curve. You want to trade the edges back to the center. That's where the money is made on days like this. Thursdays and Fridays are typically my favorite trading days. Probably Thursdays being the best because of the Fridays with these block orders that you get when people are just dumping their shares or their contracts. It can kind of skew the analysis a little bit. Again, continued slow rotations down here at the lows. Not to say that we don't extend these lows a little bit, but I mean, we're not going to be dropping off a cliff, even if the sellers are stopping in. There's no one down here to continue it. I mean, we have not seen really any buyers step in to hold up prices here as of yet. If you look over here on the left with the divergent numbers, any blue numbers, that means sellers are stepping in with limit orders and holding the price down. All right, there has been no attempt by buyers to step in as of yet. I've seen no flashes of divergence at the lows. And just slow rotate. This is all slow rotations. We're going to leave this area. We're going to find an area of greater volume. which is probably somewhere up here. We had a good volume up here on the drop, but we didn't get a higher. See, price is moving back up. It's trying to find value. It's trying to find where places where the volume acceleration rate is high, right? When it rotates slowly and it's slow to add volume, the market doesn't like that. It's here to facilitate trade. It wants to find those areas where a ton of volume gets transacted, where participants all agree that, see, right here, participants agree a little bit more here that this is an acceptable price. Okay, but you have to see on the retest, because what it did is it rotated up. It fills the limit orders that are just sitting here, but it's the subsequent retest of the rotations that you find out whether or not price is acceptable. So we have failed to rotate back up into this range to see if we're done with business here. But you see how hard it is to add volume here? These slow rotations. So we've had slow rotations down here. We've had slow rotations down here at 467. Right? I gotta believe now the market is going to test up in here to see if whether or not the rotations speed up and see if we can get more of a volume build. Because this is just slow. All right, these slowed rotations at the bottom, if we were outside of value and it was after 945, that's probably a good trade. But because it doesn't meet all the other criterion, you can't take that trade. You just got to let it go by. Let me just check to make sure I actually turn on my microphone today, because yesterday I did a recording and I didn't even bother to turn on the microphone. Fucking terrible. Okay, so we're seeing that, you know, it's just slow in this whole area. All this value range is just slow volume build. There's nothing here. Nothing. Like you're adding 10, 20 contracts per tick rotation. That's anemic. That's what I define as being anemic order flow. And that's what you want to trade. You want to trade anemia back to high rates of order flow. So we're getting a little bit of a pickup here. But it's always on the subsequent rotation test that you're more interested in, not the original rotation. As it rotates into a new area, all you're doing is you're picking up the limit orders that are just resting and sitting there. But you want to see if people will be willing to add in those areas on subsequent rotations. That tells you everything. So, yep, we're coming up into this area. We found slow rotations all the way down here to the 466 lows. We got slow rotations all throughout this area here. I'm finding some volume up here around the POC, which is just the mean for this distribution. Yep, we're moving up into the original volume area that we started off with, right? This was developed right at the open, right? Price moved through it quickly on single rotations. Market's now going to come back to see if anyone's really of interest up here. Will participants jump in? Again, as we move lower into this anemic area, again, some volume build, not spectacular. Is it enough to keep price here? Probably. Just still kind of slow. You had a little bit of volume build here, but that was over several rotations. $9.42. So we're about coming up on the time I would start considering taking trades. Again, that news release at 10 o'clock this morning, the consumer sentiment numbers, kind of precludes me from taking a trade after 9:50. I do not want to trade into that news or through the news. You got sellers stepping in. You see little flashes of divergence. But again, this is pretty anemic, this order flow here. And we've already seen that it's pretty anemic down here as well. So I don't suspect that we're going to go back down and visit 6468 unless something crazy happens with the news and we want to revisit these lows. So as of right now, from what we've seen in this opening range development, we've had good volume development up here at the highs, fast rotations, a lot of volume being added over a short period of time. And as we got down here into the 470s, it just all slowed down. Okay, so what that kind of tells us, and what we're going to be guessing as of right now, pending no one else comes in and makes some crazy move with a lot of contracts, is that these lows are probably pretty good. You might explore a little bit lower, right? Because we did have some volume build here, but it was pretty anemic, right? So anytime you get an anemia at the edge of a distribution, that usually means that edge is pretty good. It's gonna hold relatively, right? You might drift down to 464 or something like that. I don't think these highs are going to hold. I really think as we progress, even though the sellers are stepping here and they're pushing price down, we're just not getting the participant activity you want to see to continue prices lower. Right? These guys are selling, but there's no one there to participate with them. So what's likely going to happen is the sellers will be like, okay, we can probably get a higher price, let the buyers drift this price higher, and then we'll come back in. So I really suspect that we're going to visit the 495 area. Like we've got to do a little more exploration up here to see whether or not there's volume willing to be added. Again, and we talk in probabilities. There is no absolute certainties, especially when it comes to the markets. Like I say all of this, like, oh, we're likely to hold down here and we're likely to revisit back up here in the 495s. Again, probable thinking. Greater than not. Kind of getting the slowed rotations up here, 197, 218, 260. Getting a little bit of a volume build. You added 100 contracts over a couple rotations. That's pretty good. It's when you get less than like 20 contracts added per rotation. That's when I start defining things as being anemic. And those are the areas I like to trade from. But we've got to kind of be out of value and to trade back into value. But is this a good range that I'd want to trade now? No, because we haven't gone up here to see if there's a volume. I suspect there's more volume and more participant willingness up here than there is down here, right? So even if we get out of value into like 483 and see slow rotations, would I necessarily want to trade this back into this? No. So as suspected, here we go. We're visiting up in this area. We did not find the participation that we wanted down here. We're getting the faster rotations. We're picking up the speed, right? When we say faster rotations, it's this, right? It's the quick up and downs, and you add a lot of contracts every time it rotates in each direction. It's when that slows down where it's like it ticks down, adds a few contracts, ticks back up, adds a few contracts, ticks back down, can't really find anyone. Those are the areas you want to trade away from. When the market's bouncing back and forth and adding a ton of volume, you don't want to participate. You want to trade with that flow, not against it. So see, sellers stepped in at a little bit of a higher price. These are still pretty good quick rotations. We're still adding pretty good volume here. As we add more volume to this upper range of the distribution, the value area high will start to drift up, right? And the value area low will also start to drift up. And the reason why I keep a TPO chart available is so I can kind of get an overall look of what the distribution is kind of looking like. Because on the order flow chart that I use here, the footprint chart with the daily volume distribution, you can kind of get too zoomed in and you kind of lose perspective of where you are within the distribution. So it's always good just to take a look out to see where you were. So rotation's slowing a little bit up here, right? It's a little hard to make progress. You're still adding some contracts up here. Again, with it being Friday, there's a lot of headline risk right now. I don't expect things to get too far in any one direction today. I expect that both buyers and sellers are participating today. They'll balance the range because everyone's just exiting their positions before the weekend because who the hell knows what will happen. Okay, slow rotations on the test down, faster rotations on the way up. So this market looks like it wants to move up a little bit. The highs were formed right at the opening drive pretty much. We barely tested higher before we shot down on the opening drive. I do not believe in opening drive trades. All right, there's just too many participants trading for liquidity needs rather than directional bias needs. All right, they've got to balance portfolios, they've got to take liquidation orders, yada, yada, yada. And those all get transacted right at the open. Seller stepping in, you see the flashes of the divergence, right? You're adding some, I mean, we went from like 150 to 200 over like 4 rotations. This is better volume build there now. It's 948. So right now, with the news coming at 10, I'm not going to engage in this market, right? We're going to let the news event come out, even though it's an orange folder news. It's not that big of a deal, but it's enough of a big deal that you don't want to trade through it. You do not want to have open trade when that news event comes out because there could be an injection of volatility that just hits your stop or whatever, right? The environment turns very low probability through news events. Like I wait for absolute optimal conditions to place trades. I engage the markets when all the stars align, not just a few of them. I want to be outside of value. I want anemic rotations. I want slow volume builds, and then I trade back to value. That is my bread and butter. So, I mean, we've seen sellers step in this whole way up, right? They were trying to hold price down here, but they didn't find any participation, so they were unable to hold it. They allowed price to drift higher, trying to get more volume so they can start selling some more of their contracts, right? Because if you're a big seller and there's no one on the other side to buy them, you're just going to floor the price and you're going to get worse and worse fills, right? So they allow price to drift higher before they try to offload some of their contracts. Now, in these rotations down, is this a good volume build? Yeah, kind of, sort of. Not great. I would really like to see what the rotations are up around 495, right? We saw some slow rotation up here. The reason why I have so much volume up here is we rotated through this area so many times. There's a lot of advertisement of price up here. We gave a lot of time for people to participate. And we also notice, so this is a low volume area within a value. Anytime price visits a low volume area within value, you would expect very high rotations, right? This should be a generally accepted price of participants, and you would see very fast rotations and a lot of volume being added. You're not getting that right now, right? You're getting a little more price acceptance here around the POC at 6480. And then this is what happens in value. This is why you do not take trades within value, because you'll get a lot of bouncing around the mean, and there's just no direction to it. Right? It becomes very low probability to trade within value. Do I think we're going to retest these lows? Maybe. We've got a nice low volume in area here that we could potentially fill in, but again, we saw anemia here early in the market, right? Over here at 935, there wasn't just a lot, there was like no one here. So would the market come back down here and try it again? Probably not. Would I take it long? Absolutely not. You're within value. The PLC is right here. The risk reward is terrible. Be patient. Wait for the news to come out. Wait for the volatility to die down. Let's get outside of value with those rotations to slow down, and then you trade back into the value. Let's stick with the high probabilities. Don't trade for the sake of trading. The recipe for disaster. No pattern recognition, no candles. We just let the participants tell us what they want to do with price. Right, we still have not seen any buyers step in today, right, to hold up price with limit orders. It just has not happened yet. It's all sellers. Again, you're getting some anemia down here again. It'd be really nice if this was outside the value range. Like this is enough to hold price down here. We're getting enough activity. It's not pure anemia just yet. Like there are some people who are willing to transact down here. But again, does it look like prices are going to drive lower in a trend day down? No, that's not what that looks like. On trend days, when price gets to the edges of distributions, it picks up a lot of volume. It'll do very fast rotations, it'll build a ton of volume, and then it breaks. Then on the breaks, it rotates fast and adds a lot of volume. Right? If you start reaching the edges of distributions and it just rotates slow back and forth, slow to add the volume, it's not going to break down. It just doesn't. All right, this is reading the inner mechanics of the markets. This isn't pattern recognition of price, which your human mind is absolutely terrible at. This is just reading where the transactions are occurring. All right, this is an auction. People have contracts to sell, people have contracts to buy. They need to get filled. They need volume. They need someone on the other side to take the trade. All right, see how slow these rotations are? And if we take a look at our depth of market, yeah, the volumes have already dropped off for the news event. Generally speaking, on ES, usually at each tick, you usually see greater than 50 contracts. Right? And then notice how there's only like one large order here, down at 64.65, a bid. That's it. The rest of the book is blank. You got news coming. You're not going to take a position right before the news. But these rotations are so slow. See, now you get a little jump down. Okay, again, on the first rotation down, that's not telling you much because you're just hitting the limit orders that were there, right? We had that 450 contracts sitting there. So again, 698 contracts at 6465 doesn't really mean much. It's on the subsequent rotations into that level. Do you get people coming in? And you got a few people to come in. But again, is this market rotating super fast? Are you adding a ton of volume here at the lows? No, you are not. Original thesis still stands. I guess we'll call it a hypothesis, not a thesis. See, not breaking down. We're just slowly trying to find where the edge of that distribution is. Is this tradable? No, we got the news event. We're out of value. I like the slowed rotations. I like the lack of the volume. Is this probably the low? No, it's probably not the low, but it's going to be somewhere down in here. Right? Quick snap down. Fill the limit orders. As we test back into it, are people jumping in at an excited rate? Are we excited about these prices here? Are participants just jumping in like, yes, yes, let's go, let's go, let's go? No. Right? This is the slow drift down trying to find the edge. Getting a little bit more of a volume build. We're definitely finding more an acceptance down here than we were up here. Right? Sellers held down the price here. You saw the flashes of the divergence coming in. If you look over here, and they've pushed the price down. Okay? No buyers have showed up. Not a, oh, you're getting a little flash of divergence. Still not expecting a super trended down day. You're starting to see value form outside the edges. This is good. Again, I suspect that it is just going to be a normalized distribution today. We're trying to find balance. We're trying to find an area where participants all agree that this is acceptable price. And we're kind of searching. So now if we look at the overall distribution, I need to use the restroom here in a minute, but I want to talk about this first. Think about the overall shape of this distribution and what we've had thus far. We've had anemia down here on the test. We found more volume down here, but it's kind of drying up, okay? We found more volume around the POC, but where have we not tested really yet? The highs, right? We had sellers step in to keep price down. This does look like a good formation here at the highs. This is nice and smooth. That looks like a completed auction, okay? But there's a lot of low volume areas here within value that can easily be filled in. So I'm willing to go long and short today, honestly. But if I wanted to go long here outside of value, we have the slow rotations, okay? We have no volume being added, but we also have news event in 2 minutes. So that can partially explain why we're getting the slowdown on the rotations right here. Okay, all right, I'm gonna go use the restroom before the news. Okay, in 3, 2, 1, news. Orange folder news, is it a big impactful event? No. But we still get flashes of the divergence, meaning sellers are willing to put limit orders here. No real sign of buyers stepping in. Getting pretty good quick rotations here. So it looks like we're going to build some volume down here around 6458. This will drag value down. And that was not a lot of volatility with that news release, but that's to be expected. It was orange folder. It's University of Michigan consumer sentiment numbers. It's not something a lot of institutions are going to take a big position on. Okay, now we're drifting back in towards value. Getting faster rotations, more volume being added. This is good. Ideally, if we wanted to be long here, I want rotations back down into 6458. I want you to confirm that there's no one left down here to participate, okay? Then also, ideally, I would want flashes of divergence. I want to know that buyers are putting in limit orders here to hold price up. I don't just want low volume and slow rotations. Will I take a trade based on slow rotations and low volume? Yes. But this is too much volume. This is too fast for me to consider a long here. And again, we're repeatedly seeing sellers step in. And sellers are stepping in to push price away from value. Okay, that's not something you want to trade into necessarily. Like, we're getting close to what I consider a trigger pull. But we're not there yet. We're still adding too much volume down here. Right? The last thing we want is for the market to drag the mean down to here. And how far do you have to get? You have to get pretty far. But you want to trade from areas of low volume to areas of high volume. Or at least areas where participants are more agreeable in price and away from areas where no volume is transacted. So we did have slow rotations, right? I was looking for that rotation down into 6458 and whether or not the rotations and the speed of the volume accumulation would slow down. Did we get that? It was a little too iffy. Little too iffy. Okay, these sellers are routinely, you get the flashes of the divergence up here at 6465. Okay, if buyers snap them, they're going to cover and they're going to shoot price up. But they're willing to hold the line still. All right, lots of volume being added here. You rotate down again in 6458, but now you've got the value area low now extended down. Value is moving down because we're transacting so much volume down here. So this makes it harder to take a long. Right? We want more distance between out of value and value to take trades. We want good risk rewards on our trades. You don't do one-to-one trades. Two-to-one trades are okay, but you definitely don't want one-to-one trades. And if you were to take a long here outside of value, say 6455, you're targeting this low volume area right here where these sellers are stepping in. Like your take profit right here at 6465. So you've got to be down here to be taking that trade. And there's just no out of value area here. Do I expect that prices are going to find themselves up here in a little bit? Probably. I think that's the likeliest scenario. Because on the rotations down here in the 6458 area, and these lows have been pretty slow. And we had a pretty good volume build here on this last rotation up into the 464s. If I was courageous, I'd be long here. But not all the stars have aligned. This is within value. Do not trade in value to in value. Like you're pretty hopeful that we're going to snap these sellers that keep on showing up here at 6465. But if you do snap them, price will move quickly because they have to cover. But on these these rotations down, it's just like you're not adding a ton of volume. It's just the market participants don't really agree that this is a good fair price to transact at. If this was out of value, right? We didn't have these sellers present here at 6465. This is a long, right? But again, because we're in value, you don't take this trade. We wait for ideal conditions. I don't trade for the sake of trading. Buyers stepping in, trying to snap this little sell level at 6465. Because this now has appeared. I now know buyers are willing to step in here at the lows. Get me outside of value on the slowed rotations and knowing that this is right here and buyers are willing to put limit orders in this area. This is 100% a long, but we got to be patient and you got to wait. Right? Because the sellers have routinely stepped in here at 6465, right? And how far are they getting? Are they getting far with their price movements? Not really. And why is that? Because buyers are willing to step in at these prices. Not to say that this doesn't just immediately break down on a large participant jumping into the market. That happens. But absolutely anemia right here. Right? As you rotate, how many contracts are we adding? Like 20 tops? Right? At a 10. Getting a little more activity here, filling in this low volume area. Right? Within value, expect the low volume areas to be filled. Because they're generally created by a large movement, not by lack of participation. Buyer stepped in again. Okay, they're going to try to hold us. We've had slow rotations going into these lows. It gets outside of value right now on slow rotations and a low volume build. We want to be long. And if you broke your trade into pieces, one piece is going to be here at 6465, and another piece probably up here at 6473. If you had three pieces, the final one's at the POC. But I mean, there's just like, there's not a lot of activity down here. But the market is just making sure that we're done with this auction down here. It's going to continue to advertise these prices. So long as it gets volume, it's going to continue to advertise these prices. It's once volume becomes non-existent after the advertisement, the market will move because it just takes one side of participation to move it because the other side's just not there. I mean, this is the fundamentals of how an auction works. No guesswork, just reading what actually is occurring. Okay, let's see if volume picks up here at the lows. It's picking up a little bit. Are you comfortable taking along here? No, these rotations are a little too fast, a little too much volume being built right at the value area low. If we get another rotation down and it slows down a little bit, I might like this for a long. All right, my first target is going to be 6465. Yeah, this is pretty slow. This is pretty slow. Get me outside of value, and I'll take it. Picked up a little bit. 158. You just added 100 contracts on that rotation. Yeah, you don't go long. And get away for the volume to dry up down here. And it's not drying up. All right, we're just adding to the edge here. These are pretty quick rotations. Good amount of volume being transacted. We saw the flashes of divergence. The buyers are there, but so are the sellers. All right, when they're both present, you get the fast rotations and a lot of volume being added. We're not ready to get long just yet. I mean, strong possibility that we test these lows, fail to extend them, and then we go all the way to the highs, right? Because we have not tested the exact highs of the opening range yet. If the market leaves us behind, the fucking market leaves us behind. That's the nature of trading. We wait for our ideal scenarios. If you don't get them, you don't take the trade. Move on. Get it another day, another way. Yeah, I mean, this is slow on the rotations down. I like this. But again, I want outside value. You got to be outside value to take the trade. Will we get it? I do not know. I do not know. Sellers stepping in. Sellers are trying to hold down this price, but buyers are also stepping in here down at the value area low. Let's see what happens. Boring trading is good trading. Being patient and waiting, it's how you make your monies. Marty Schwartz says he made most of his money by sitting on his hands. I make most of my money by just crossing my arms and waiting. And off the mouse, because we're not where we want to be. I'm not selling this and I'm not buying this. Even though I know sellers are present here at 6465, I don't have high confidence that they're going to be able to hold it. All right, as they break, it's going to snap. It'll go quick. And it's being a little difficult to see. You're adding a good volume here on these rotations up. This is a good volume build. And this is what you would expect to see in the low volume areas within value. As price comes in, you get quick volume builds, quick rotations and quick volume builds. And over the 1 minute spans, we still have good sustained volume. It's once these numbers start getting below 2,000 on the 1 minute span, that's when you know the market's not interested in that spot. Market's pretty interested in this spot. We're adding a lot of contracts over a 1 minute span, just filling it in. Fast rotations, good volume speed. Do still expect a pretty balanced day today. It's Friday. Institutions are dumping, exiting positions. They got headline risk going into this weekend. Who the hell knows what's going to happen with Iran? And when we're this deep in value, it's just you sit and watch. You just wait. You wait for drifts outside of value. You got to be patient. Patience is the name of this game. Trade market mechanics, not hopes and dreams. Slowed rotations coming down. Slow on the way up too. The volume was much, the participants were much more interested up here than they are down here. But I want to know that they're really not interested down here at 457. All right, because we don't seem to be very interested in this range. We're interested in this range. Let's confirm we're not interested in this range and we'll take it long. And given that we've kind of were able to break the sellers a little bit here at 6465, you can move your target up to 472 because it'll test this area next. Pretty good interest here. Decent rotations, decent volume being built. Again, flashes the sellers again. They're still there. They're still dumping their stuff at these levels. They've been doing it for a little while now. All right, we've been held here for some time. Right, the flashes of the divergence, hard divergence numbers here, right? But how long can they keep on doing this? I suspect not very long. Like if they were stepping in here and on the subsequent rotations down, you had a lot of volume being built and quick rotations, yeah, they might be able to drive the price lower, but they can't because there's no one there to take the other side of the trade. And they don't want to keep on selling and just driving price lower, right? They have contracts they need to offload. They need good prices to do so, right? When you're given instructions, hey, I need you to sell $200 million of S&P futures, you're trying to get your best price, right? You don't want to sell and then sell lower and then sell lower. You want to sell a little bit, try to get prices drift up, sell some more, right? You want to sell high, not low. So what did I tell you? We're gonna test 6472 next because we had enough volume being built in this area. Market participants want to know whether or not enough volume can be now built in this area. A normalized distribution for the day. Low volume areas get filled. They attract participation. Okay. We just did not get enough rotations outside of value here to make a good value judgment that the market is no longer interested. This was all done pre-news. It does not count. You just ignore that. But on this one, when we came down, yeah, was it a pure anemia? No. Did you have the flashes of the divergence? Yes. Did the rotation slow down enough for us to justify a trade? No. Was it close? Yes. And I was talking about it as the price got down there. We were close. We were really close to wanting to pull that trigger. Are we okay with not pulling that trigger right there? Absolutely. We still got time. I trade until usually 11 o'clock in the morning. We got another 45 minutes at least. We're 45 minutes in. We got 45 minutes to go. We're halfway done. You see how the rotations are kind of slowing up here. Buyers are trying to take the price higher, but you're slowing a little bit. It's not super excited. Not a ton of volume being built. Like that's what the market is looking for. That's what participants are looking for. They need someone to clear their other side of their trade. And these people trade in hundreds of millions of dollars. Okay, these are not retail traders. These are institutions, sovereign wealth funds, family endowments. Like they need volume. But again, slowed rotations on the test down. But again, some good volume being built in these low volume areas. All right, within value, we can just expect price to drift back and forth as it fills in. You're looking for the volume. Is it here? Is it here? Hello, anyone? Like you'll just drift around. These are low probability areas, right? And just sit here with my arms crossed and I'm good with that. Make most of my money sitting with my arms crossed. A whole lot of nothing to do at the moment. Value area high is drifting lower as we build more volume here. Volume area low is also drifting higher. So volume area low is coming up. Volume area high is drifting down. POC is still up here near the highs. So that kind of precludes you from taking shorts up here. But the POC will be moved down. It's not going to stay where it is. There wasn't much interest up there at 482s, and there seems to be a little more interest down here in this range. Everyone's just looking to get out for the weekend, whether it's a long or a short. They're just looking to get out before the weekend. No need to get excited. Just be patient and wait. Patiently waiting. I have no bias, right? I don't come into the day saying, hey, I want to be long today or I want to be short today. I let the auction tell me what it wants to do and what the market participants, what they want to do, right? It'll all be revealed in their transactions, whether they like a price and they don't like a price. We trade from areas that they don't like to areas that they do like. It's very simple, and it's very obvious when it happens too. The precision you can get with order flow is crazy, okay? And then it all after that just becomes emotional management. Like reading this, not hard. Trading it is the hard part, right? So now you just had the POC drop, right? It was up near 6480. Now it's dropped down as we build volume lower. And that's good if we want to take shorts up outside of value at 6482. Volume's still not drying up. Still plenty of people willing to transact here. So the market just goes slowly up, slowly down, slowly up, slowly down. It's just looking for people to fill. Anyone here? Hello, Bueller. Anyone? Hello. And it's finding people. We're within value. We're going to find some people. All right, value just represents the area that's served as the greatest attraction of price. Participants are very willing to transact within value. Lots of volume here. All right, pretty normalized distribution shape taking place. Good clean edge up here, pretty good clean edge down here. So this just tells me we're going to be probably spending the rest of our day somewhere within here, right? As we drift out to the value area high and drift down to the value area low, that's where you want to take your trades. Simple. play within the constraints of what the market is giving you. I'm always okay not taking a trade. I'm always okay doing that. All right, the market doesn't give me what it is that I'm looking for. There's always Monday. All right, buyers stepping in at the same spot that we saw sellers holding price down. Want to drift outside of value to get an entry. Just being patient and waiting. No need to do anything. Just be patient and wait. There's absolutely no news events for the rest of the day. Trump speaks at 5:30. We got some Fed speak at 11:30. That's irrelevant to me because I will no longer be trading for the day. Any other news events? Nope. Check in financial juice. Nothing. Pretty anemic down here at 6464. Yeah, these rotations are slow. You're not adding a lot of volume down near the value area low. So we're building the case to be long. But the remaining criterion are that we get outside of value. And we're not there yet. Again, I apologize for any audio and visual quality. I'm working on it, but that's not my primary focus. My primary focus is markets and trading. I'll get the rest of that sorted out over time. We got divergence. Buyers are willing to step in. It's good. It's good. Ugh. Again, good trading is boring trading. Just drifting around here in value, going back and forth, filling in areas, looking for the volume. Completely expected. Just filling it in. And we've had another shift in the value areas. Value area high came down. Value area low shifted up a little bit. Gives us a little more wiggle room to place trades, which is good. Always want to be outside of value to take trades. All right, this is a statistical edge, not a make-believe pattern recognition edge with candlesticks. That's not real. So many traders are lost with the candlesticks. Because you think you see a pattern which is not really there, you trade it and it doesn't work, you get frustrated, and then you think you see another pattern, you trade that and it doesn't work, you get even more frustrated, and you just keep jumping from pattern recognition to pattern recognition. And what you fail to understand is that it is you, the human pattern recognition skills, that are the problem, that you continually find patterns where they do not exist. Once you break beyond candlesticks, you can become a much more profitable trader. You're always going to live in a coin flip edge world trading candlesticks. I'm sorry to tell you, but that's the truth of the situation. I don't care how many new concepts and new patterns they come up with. It'll always be a coin flip. Always is. There's no edge there. You need a well-definable edge to make money in markets. Trading candlesticks is not it. This gets at the heart of the auction, right? Buyers and sellers trying to get their business done. These are very large players with hundreds of millions of dollars in contracts to unload and onload. They can't do it unless someone else is on the other side. Right? Very rarely does the market just straight up trend for the day. There's retracements, there's balance, other sides step in. Let's see if we can get outside of value here. I mean, these rotations are pretty slow. There's not a lot of volume being built down here. You're getting a little pickup as you start approaching outside of value. Just shake my head. I mean, there's always a possibility the market just never gets outside of value. Right? That happens. There are days where I absolutely do not take a trade because the market conditions do not favor it. I wait for the market to say, hey, this is a high probability area, take the trade. Anything short of that, I ain't touching it. Been doing this for 20 years. All right, let's see what happens as we drift here out of value. If we get there. I mean, the rotations are slow. There's buyers there. Just give me 6459. Give me 6459. I'm going to keep my mouse over 6459 because there is a strong possibility that you get outside value by one tick. Happens all the damn time. All right, there's just, oh God, there's no one here, man. Right? If it keeps up this anemia where you're barely adding contracts for every tick rotation, that's what you want to trade. You just needed to do it right here at 64592. Get me outside of value, continue the same market behavior. Okay, a little faster. Fucking value area low extending. Or now our criterion is even lower because we've moved the POC down here now to 6465. But these rotations are good. They're slow. Little volume is being added. We're really building the case to be long here. Really building it. But you have to be outside value to do it. These rules exist for a reason. Low probability entry, high probability entry. Makes all the damn difference. Is it very possible the market just shoots out of here and leaves us behind? Yeah, absolutely. That happens, right? But a win for trading is following your plan, being disciplined, and executing well. Wins are not profits, okay? You can absolutely know nothing about the markets and put on a winning trade. You can read that in Mark Douglas's Trading in the Zone. He talks about that a lot, right? You don't have to know a fucking thing about the markets to put on a winning trade. You can just hit the buy button and then flip a coin and hope it works. Right? But I live in a world where I want probabilities on my side. I don't do coin flips. I want stacked odds. You're getting more volume on the upside than you are on the downside. Again, better case for the longs. We saw the flashes of the divergence. There's buyers there. But we got to test outside the value area to know that there's no one willing to participate there, and then we'll take our trade. Plenty of volume being built here on the upwards rotations. All right. Prices will continue to move up so long as that's the case. If you get no volume on the rotations down, it's a long. The POC being this close to your long entry, is it favorable? No. That reduces the probability of your trade success. If we drift outside value with the POC being there, gets the slowed rotations, the slowed volume, flashes the divergence of buyers with the limit orders, do you take the long? Yes. Is it the highest probability trade that you could possibly have? No. Because that POC is right there. All right, the POC represents the area where the most volume has been transacted for the day. right? That means participants like that area. They're willing to keep price in that area because they know other people are on the other side of the trade in that area. I mean, slowed rotations, slow volume builds on the low. Is trading frustrating? 100% is one of the most frustrating things I've ever done in my life. It frustrates me every day. I've been doing this for 20 years and it still frustrates me. I want A plus setups every single day, every single moment that I can just be like, yes, let's go. But you don't get that. You got to be patient. You got to be disciplined. You've got to wait. Got to wait for favorable conditions. And there's flashes of divergence. Sellers are willing to hold price down here too. Divergence at the POC isn't really saying much, okay? Because they know that there's a lot of volume being transacted. I can just put a limit order there. It's going to get filled, right? Much faster rotations and speed on the way up than on the way down. I expect more upside than downside. Distribution around 6462 is starting to get a little rounded, right? Which tells you that we could be completing the auction pretty soon. It's once you get this to start looking more like a bell curve, right? It has more a definitive roundness to it. And then also when the rotations and the volume speed slows down at the PLC, it usually means the auction is just about completed and that you're going to move away from that price. So as of this moment, do I have a directional bias? Yes, it's long. It's not short. Are we in a spot where I would get long? No. I think there's a more willingness of participants to transact at higher prices than they are at lower prices right now, given what we've seen. Are we getting kind of slow rotations up here? Yes, we are. That's not very bullish. Getting a little bit better. Talking out loud, is there more willingness participants to transact here at 6465 than there is down here at 6457 area, right? Much more willing up here than they are down here. And we're starting to see the slowness around the POC. So we could be leaving this area pretty shortly. But sellers are willing to step in here again at 6465. They've been doing this all morning. They allowed price to drift up higher for a short period of time. And sellers have definitely been more prevalent today than the buyers. And we don't trade location, we trade acceptance and failures of the auction. And acceptance is fast rotations, fast volume builds. Rejection is slowed rotations, slow volume builds. See how slow this is? Each rotation, you're adding like 5, 6 contracts, 10 contracts. This is very slow. You will not stay here. We've run out of participants. And see how these ranges are also overlapping, right? And then volume is decreasing, right? 4,000, 3,000, 2,500, 2,500, 2,500. If we stay within this range and it becomes less than 2,000, leaving the range will be imminent. It's been my experience once you see volumes get less than 2,000 per 1 minute time span, the market is not interested in staying there. It takes one drive to get it out of that area. But I mean, this isn't a very bullish case either, right? The seller stepped in. As soon as you saw the seller stepped in, they just moved price down, right? There wasn't a buyer there to sustain the price. But they're flashing it on the other side. All right, this is a balanced range. This is what we were expecting to happen today. The market was going to find balance somewhere down here because it had not over the past couple of days. As it tried to drive down to this area, it couldn't find balance. It couldn't form a normal distribution where participants agreed that this was an acceptable price. So now we just sit and wait. And it's already 10:40, almost 10:37. Have there been times where I've taken a trade within the last few minutes of the session? Absolutely. Right? If the opportunity presents itself. Right? Sellers stepping in. Slowing down around the POC. Okay, so remember I told you sub 2,000 per 1 minute? We've now done it twice. Price is now going to move. Watch. I think there's potentially more upside than there is downside, but it could very easily try to form another distribution or something down here, but we're drying up here. If we get down here out of value and it's slow down here too, and we saw it was slow right here, where is it going to be quicker? Up here and up here. It's going to be quicker up here in this range. And that's what we're looking for. That usually means it's acceptable to trade through the point of control. Is when the point of control is slow, the volumes dry up. See how now we're moving away, right? I told you, less than 2,000 per 1 minute span in a normalized distribution, we're going to move away. Is this a long now? No. Look how fast these rotations are getting. We're probably going to extend these lows here a little bit, try to find the bottom. We want volume to dry up here. These rotations were too fast, too much volume was being built for us to consider a long. The hypothesis still remains that this is the best long area. This is the highest probability trade here, somewhere in this area down here, and then trying to take it up here. But on this first rotations down, we had too much volume. Let's see what happens now on the second rotations down. Not a very good volume build. Right? We're filling in a little bit of this low volume area. I'm going to keep my finger on 6456, put in a bid. Oh, make sure we're on the right thing. I was on ES, not MES. That would have been a bad mistake. Yeah, I like this. I do. 6456, 645650. Let's see if we can get fill. Stop is at 5150. Oh, we did not get filled. Let's see if it comes back down and gives us our fill. I'll do 645675. Stop at 45175. Fuck. Yep, that happens. Right, we're targeting this area. It barely rotates outside. It was very slow. Right, the first rotations down, you're just filling the limit orders. There could be a lot of limit orders sitting there, but it's on the subsequent rotations down that we were looking for. Right, we almost got filled. I think we're like 2 ticks away from being filled. Right, much more volume being added on the way up than on the way down. That's good. That's building the bullish case for you. All right, now I still have this limit order at 645675. I'm still willing to take a trade here. I don't care that the sellers are flashing here because we don't seem to be very interested in going lower. I think this is a high probability trade. Will it always work out? No. Still not filled. Order sits at 45675. The last line out of value. Is there a part of me that really wants to move this limit order up? Yes. Because it's just so anemic down here at the lows. It could explode right through my order and hit my stop. All right, so we're filled. And we're at 1041, so we're going to put this in our log. We are long at 645675. Our stop is at 645175. Taking profit at 6468. I like that. I like that area. Okay, so we're going to put a sell limit order at, let's make it 6467. Let's not be greedy. Okay. Now let's watch the auction. Right. Where will I move my stop if we're in at 645675, which we are? And our take profit is 6467. I'll move it here at 6462. Yeah, 6462. I'll move stop to break even by 1 tick for transaction costs. All right, so I'm going to keep my thing on 6462. If price moves through this or hits it, I move my stop to break even one tick above at 6457. Am I concerned that you're getting low volume on these rotations up? Yeah, kind of, sort of. Like we saw the flashes of the sellers there, right? What we don't want is fast rotations down through our entry, right? And you're kind of getting that right now, right? You're seeing the volume build at the lows, but you gotta let this play out a little bit, all right? Give it a little wiggle room. Don't be so strict with this. Right, volume's pretty anemic down here. Like, I got to imagine we're going to leave this area. Whether we're going to shoot down or shoot up, I think we're going to shoot up much more likely than you're going to shoot down. But you're going to leave this area. There's not enough volume being built here. Stop still remains at 451.75. No, let's just cross those fingers. All right. Let's see what happens. Ideally, you want to shoot up with fast rotations and a lot of volume being built, but you know, markets generally don't give you everything that you exactly want. There's more bids on MES at the lows than there is. ES is not really much. Okay, flashes of divergence, that's good. We're still hovering here near our entry. We've only drifted slightly below where we got in at. It is a good sign that you're failing to rotate outside of value. That is a pretty good sign. But you want that explosion higher with fast rotations. Right, that's a little bit better. That makes me a little more comfortable. We get 6462. We move to break even. Okay, so you got that. So now the stop is moved to 6457. Sell stop. Clicked on the wrong side for some reason. All right, so I'm going to enter at 6457 as our stop on my little trade sheet. As we get up towards 6465 up in this area, I'll be a little more aggressive with moving my stop. Right now, we're about 4 points in profit, 3 points. If we get stopped out here, we get stopped out, right? We're following our plan. Seller stepped in at 6462 and fucked our trade. And that happens. They fucked our trade. Right? There's one guy sitting on the toilet. He came back and he hit the sell button and fucked our trade. That happens. Nothing you can do about it. We don't get upset about a loss. We get upset if we fail to execute our plan. We did exactly what we wanted to do. Okay, let's let this play out a little bit. I don't want to jump just right back in at the same spot after we got stopped at that spot, right? Because market rotated up to 6462 and the sellers jumped right in, right? So now we've broken down, right? We're going to leave this area. You knew you were going to leave this area. The volumes were becoming absolutely anemic, right? The market wants to facilitate trade. But now we have a much larger value area, outside of value area here at the lows to trade within. Are we concerned that we had such large volume transacted at these lows? No, these could have just been rest and limit orders, right? It's on the subsequent rotations down. Let's see what happens. If we rotate back down and still have more, like no volume being added here, we're going long again. Are we going to be annoyed if this market now shoots up to our profit target? Yeah, a little bit. Just a little bit. But are we going to carry it with us for the rest of the day? No, this is trading. A win is when we execute our plan. I don't judge days by profit and loss. I judge days based on execution and my ability to read the markets well. You bum. You bum of a market, you. You just had to test low to make sure that no one was there, right? Getting plenty of volume now up here at the POC. This market looks like it wants to move higher now. It's probably going to do so without us. Our original stop was at 6451.75. So would we have been stopped out? Yes. And we were in at 5675 and we moved at 62. 6462. So 6 points in profit. We moved our stop. I'm okay with that. That's 1R. Moving a stop at 1R is okay. Let's see if we get another test down outside of value within the next 7 minutes. As of 10:55, if there's not another trade, there's not another trade. And I'll take a break even all day. But we judge our day based off execution and market reads, not based off profit and loss. Did we do what we said we were going to do? Yes. Has the market mostly done what we thought it was going to do today? Yes. No trend. It's Friday. Headline risks too high right now. It's a balance range. Institutions, everyone with money is just getting out of their positions before the weekend. And that results in balance ranges. They got to find the volume. And they found it. So we let this play out for 5-6 more minutes, and then we'll call it a day. It was a good Friday, though. Read the market well. All right, now it's hit your profit target that we were originally targeting. It's just we didn't see this coming, right? The one last check outside of value to make sure that there was no one there to participate. And it didn't even rotate again down to test it, right? If it had rotated down again into this area and slowed rotations, slow volume build, absolutely would be long. Absolutely. And we just didn't get what we were looking for. And we don't chase. Right? The original hypothesis was outside of value, back into value, and you would fill in this low volume area here. Right here, within value. Those are the greatest targets, is low volume areas within value. It's unfortunate. But that's part of trading. It is one of the toughest endeavors you will ever go through in your life. It will test you emotionally like nothing else. It will make you doubt yourself. This is good volume here. This is good rotations, good volume build. We like this. Shoot, maybe we get outside of value on the high side before we get back outside value on the low side. Do I like transacting here? No, I like transacting right about here, 64.82. Sellers are stepping in before it gets outside of value. That's a good sign if you want to be short outside of value here. If you look at that history of divergence here on the left, I mean, sellers have been stepping in all day. All right, not much of the buyers have stepped in. They stepped in at the lows. And that's how lows form, is when people step in to buy. That's how highs form, is when sellers step in to sell. It's not a candlestick pattern. It's not a previous high or low. It's just when the participants step in to transact. Oh, so many people are lost trying to discover price patterns that do not exist. Sad. You guys just blow accounts. Stick to the math. Best trading books have nothing to do with trading, everything to do with mathematics. Right? Statistical edge, right here. This is all you ever need to look at. See how close we were to nailing that bottom? Right? The price retraced too much. And it checked the lows one more time. right? But the volume was absolutely anemic there at the lows. Slowed rotations, that's exactly what you want, right? And we executed on it. Job well done today. I'll try to spend some time fixing the visual quality of the stream. I've never done streaming before. Like I'll record videos for my own self-improvement, but posting them online, this was just a new idea of mine. So it's going to take me some time to kind of figure out the graphic design, how all this works. Like my primary focus is this, reading markets, trading markets. That's what I love to do. I'll never stop doing it. I'm never going to retire. Been doing this for 20 years. I'm still excited every single day. I cannot wait to sit down at 9:30 and start trading. It's so exciting. Even though half the time I just sit here and going like this. Just reading the markets and just sitting and waiting for my time to strike. All right, you have to be so patient, but once you get what you want, you have to be decisive. Okay? Just rotating within value, just building. If you look at the TBO chart, look at this dip here in the volume, right? We should be getting good participation in here. Because this was created by a fast pass through, not because of a lack of participation. And seller stepped in. We had the flashes of divergence up here. Now you got it down here. They're trying to carry prices lower. They're selling, but prices are drifting lower. I wouldn't be surprised if they back off a little bit, allow price to drift higher before they can sell again. All right, because they're selling, they're just drifting the price lower. You're getting lower and lower, worse fills. Good volume being added, good rotations, good volume speed, all expected within value. Participants like this area, they're very willing to transact. Hopefully begin a new microphone the beginning of next week. Any concerns, comments, questions, just leave them on the YouTube. I'll try to figure it out. I'll try to answer any and all questions that I can. And rotation's slowing a little bit. Like once you go into order flow and auction theory and start reading the markets extraordinarily well, you'll never do anything else. Like this is it. This is the final form of trading right here. You are literally getting at the heart of what makes financial markets, right? Things have not changed since they started transacting underneath the tree on Wall Street. Okay, there were sellers and there were buyers, and price reflected what they wanted to transact at. Right, when you see the price of oil at 98.23, the last transaction was at 98.23. That's what that price represents. You can have all the intention in the world, but as long as you don't transact it, it means nothing. Auctions for financial securities has never changed. It just happens a lot quicker now. It's a lot more liquidity. Price moves a lot quicker than it used to. But if you were to drop me on Wall Street in the latter part of the 18th century, oh, I'd fuck them up. I'd drain every single last dollar out of those guys. Absolute speculation. I had no idea. They were doing back then what candlestick traders do today. Like you get emotional, you see these big candles, you're like, oh, I gotta get in, I gotta get in. There's some sort of like fair value gap. I gotta watch the retracement of the fair value gap. Nope, doesn't work. No statistical edge there. That's been tested over and over and over again. It so amazes me how many studies have been done on technical indicators and price charts using candlesticks that show absolutely no edge, right? There is no one at Renaissance Capital right now trading fucking candlesticks. It's not a thing. Candlesticks are in a world of retail traders. It is not in institutional trading. If you ever look at a trader screen in an institution, do you ever see a fucking candlestick anywhere on that chart? No, you do not. If you use a candlestick less than a daily time frame, you're dumb. You're absolutely dumb. You're just flipping coins. You will be so frustrated for the rest of your life if you continue to do that. Like if you use candlesticks over a daily time frame, is there some more edge? There is, and it's in the high and the low. It's not in the open and the close, right? Open and close, where the market opens and closes is absolutely irrelevant, right? Retail traders overnight on low volume move markets, and then they open in obscure places, right? It's where the high and low is formed during the U.S. cash session that tells you everything you need to know. Volumes in Europe are minuscule compared to what they are in the US. And forget Asia. Asia might as well as not exist on financial markets. They have little to no impact. Okay, we trade 10 times the volume during the US session than they do in Europe. They used to be the big players, but they're babies now. We run the show in financial markets. It's all you have to look at is the US cash session. The gap that was formed here overnight means absolutely nothing because it was done on low volume and with no participation. If you formed a big drop like that during the US cash session, pay attention. If it's done overnight, means no difference. And if someone tells you like that's your draw on liquidity until that's filled, bullshit. It only gets filled if the US traders want to fill it, right? If they think there's good volume and value there, they'll take prices there. But if there's no one there, they're not going to do it. And how do you find out if people is there? You have to drift price up and see if any volume builds. If it starts drifting up and there's no one there, they're not going to take it any farther. Why do you want to keep on buying and buying at worse prices? You don't. That's not how institutional funds work. Like you are just along for the ride. You are piggybacking off their moves. Nothing you will ever do. Nothing. You could take 500,000 retail traders and have them all pool their shit together and try to get them to move a market that's as liquid as S&P futures, the SPUs, won't do shit. That shit might work in illiquid securities like GameStop. It doesn't work here in SPUs. This is the most liquid security in the world. Read what the institutions are doing. Right? They're just looking for someone to take the other side of the trade. They're trying to get in and out at good prices. And there's absolutely nothing. This is why we're ranting and raving about institutions and candlesticks and retail traders, because there ain't nothing to do right now as we rotate back within value. There's no edge here. I don't care if sellers are flashing limit orders. It doesn't matter. You do not short this. If you got those flashes outside of value with minimal rotations and minimum volume build, then yeah, you take that short. Okay, 11:01. We've gone past our time. If you tuned in, I thank you. If you watch this later, I thank you as well. Like, subscribe, leave a comment. I will improve the quality of this channel as we go. But again, the primary focus is teaching and educating on order flow and auction theory to get traders to stop blowing their accounts looking at candlestick patterns. It's so frustrating the amount of people on YouTube that are just peddling absolute garbage, right? You might as well just sit there and flip a coin. They sit there and debate. Literally, the price can sit at the same level, and they're like, should I be long or should I be short here? Are you kidding me? Like, it's frustrating. So I help you guys and girls to work through this, right? I trade every single day, Monday through Friday, 9:30 to 11 without fail. I do not trade the afternoon session. I do not trade Asia. I do not trade Europe. I only trade the US cap session because it's the only thing that matters. It really is, right? It's where all the volume is. It's where all the institutions transact at. It's right here, right now. Will there be moves later in the day? Sure, but I got other shit to do. I've got a family. I've got a home. I've got kids I got to take care of. Like being a stay-at-home father and a trader, like this is my devoted time to trading. I do this to support my family, not for my ego, not for likes and clicks. I do this so I can put a roof over my children's head and put them through college. That's why I do this. Is it frustrating that we got break even today? No, not really. We executed exactly what we said we were going to do and exactly the spot that we said we were going to do it. We called it before it happened and then we did it when it happened. A plus trading right there. That is A plus trading. Was it an A plus setup? The POC was a little close, right? You had the flashes of the sellers, but that only dilutes the probability ever so slightly, right? It's more in the volume build and the rotations, right? Look how slow you're getting around this POC now. Is price going to stay here, ladies and gentlemen? No, it will not. No, it will not. We'll drift away from this as well. There's not enough participation here for people to do business. So now the market's going to start looking to somewhere else. All right, everyone. It's been great talking to you on this day, March 27th, the year of our Lord. Thank you, everyone. Have a great weekend. Spring is here in the United States, in the Midwest. I love it. Hopefully it starts warming up. We had almost 70 degrees here yesterday in Michigan, and now it's 30 degrees. Welcome to the suck. All right, everyone. Take care. God bless. And I'll see you on Monday.